Hi, today is Sunday the 16th, and this is this week's outlook for the coming week. Last week was a bit of a roller coaster, as you can see. This is a 4-hour chart, and the market dropped very abruptly to support. It even hit the fib here, which is a fib from a pretty long pattern, and probably a little bit more surprisingly, it bounced off to actually regain more than about two-thirds. I mean, the 61.8 fib is here, and it hit this resistance, which is not a very strong resistance. So the market could actually aim back to strong resistance again. At least on the positive side, we see that we have a range that is well delineated. It could be penetrated again like it was on the downside or on the upside. And these abrupt moves are, of course, because there's concern about the market being very overextended, and also those moves are exacerbated by very low traded volumes. If we look at here, 3 billion, just above 3 billion shares traded on the SPX, that's way too low. If we look at here, as you can see, the market is now almost at all-time highs again, and volume is actually dropping. When a strong move is not accompanied by large volumes, generally there's no reversal. The reversal needs capitulation on either side. So this means that we could actually get back to bullish trend mode, unless, of course, volumes come back. In terms of correlation, we had last week the signal or indication that something was brewing. When correlation got very poor, it even turned positive for a while. But now correlation is going back to its long-term average. So on the volatility side, it looks like we're getting back to a normal regime. So let's go back to this chart. So on this one, unless there was a penetration of fib, market should actually keep grinding higher. The nervousness that we saw last week could be repeated. I still think that over the longer term, it could take a few weeks, we will have a return to bearish mode, but we will see how it goes. Let's move on to the daily chart. Daily chart here, we also see this abrupt moves here going to this long-term fib around 40.50. This 40.60 is here as a pivot, which is still a very strong support. Here we see that, of course, the market could, if it breaks higher, could actually aim for a much higher resistance. And this support level is still key for the bearish mode to set in. So we will be watching this level. If it gets back to the 40.60 area, we will definitely watch out, because if it then breaks, it could go to not only a lower fib, but really trigger more selling mode. Here, the strong support is actually much lower. I would say that the hesitation with probably some bullish momentum because of those massive liquidities, expectations of the Fed being still very dovish, or at least waiting on a sideline for signs of recovery. Inflation that triggered that sell-off here is picking up way above the Fed target. But then at the same time, the day after, when PPI was released, it showed edging up a little bit. So we will see, maybe it was a one-time event. So it's probably the Fed will look for further evidence of inflation picking up. For Monday, we see actually the same lines as on the 4-hour chart. Here again, if this resistance holds, it's still possible. It was a pivot not so long ago. Then we could actually get back to the pivot. If I draw a fib here, we have a conjunction of supports, not on fib and slightly lower. Bullish resilience being just above the pivot on 41.50. So on this one, we will look at probably continuation. There are not many news that could actually derail the bull trend next week. That can happen, like it surprised us last week. Here as well, we should count on this trading range to hold a little longer. The longer time frames still probably indicate that the market will look for a double top, but we will see how it goes. I would think the market will hover in this upper half of the range 41.50 to 42.20. Of course, moves can still be pretty wild and erratic in low volumes, so we should be a little bit cautious. Depends on your trading style and how you hedge and how you or wide your tent is on the current trades. It's still fine. We will look at that in the next video, but cautious must be exercised. This episode of bearishness showed that the trades were quite sensitive to volatility, more than I would have expected. So be careful about your Vega exposure. The volatility swing was actually abrupt. I have here the VXX. As you can see, we went from 36 to almost 50. 50 was a strong pivot which acted as a resistance, and now it's going back to lows. It looks like the downtrend on VIX is still there, but if it's the same as we saw. If 40.50 on the SPX breaks and 50 breaks on the VXX, the market could actually turn into quite a solid bearish move. Okay, that is it for now. Next video will be on the current trades. I probably don't have the data over the weekend, so it will be recorded tomorrow morning. Please note that, of course, there are more updates on my Slack group, bwbflies.slack.com. Although the Slack group has been tagged as public, I've heard that some people have trouble accessing it without an invitation, so just drop a message below and I will send you an invite. Thank you for watching, and bye for now.